Welcome back. You're watching Big Deal and we are discussing the infrastructure trusts. Now, in the last segment, Suraj, you were talking about the various sectors. What interested me the most is the thermal power sector. When the world is moving away from thermal power, of course, we are a developing country and there's a lot of noise about sensible energy transition also. So what about thermal and what category of investors are really looking at this?
Sure. See, thermal is not going away anytime soon until we actually find a solution for round-the-clock power supply through renewable energy.
And the battery.
And batteries and storage and everything else, right? And even the government of India recently talked about a 80 gigawatt addition to thermal assets in the next 8 years. That's a big number. Thermal assets make immense sense. Anybody who invests in thermal assets will make money. But the problem is many of the current owners or operators, because of ESG compulsions, they are not able to continue to hold them. That has to be invited out at some point of time. Of course, foreign money cannot come here because of similar ESG compulsions. So what we expect is those assets are going to come into InvITs and domestic public market funds are going to fund those assets. People are going to make money. Mutual funds, insurance companies anyway invest in thermal stocks. It's a natural progression to own thermal InvITs.
Of course.
So
there goes my other question. See, IPO market was very much open for infrastructure companies. Back in the day, they all grew because of IPO money, funding, right? And many power companies also, and there's some big ones, are still thriving very well in the listed space. So is it going the IPO route as well for thermal, do you think? Or is it InvITs that you're talking about?
So I think both of them will coexist. That's my short answer to this.
Okay. So that brings me to another very important question. Are infrastructure IPOs making a comeback? Are investors now likely to show more interest here?
Yes. I think what's happened is when InvITs came into being, we had two sets of investors. Investors who wanted to take development risk. Those are mostly strategic guys, but also we had some infra PE funds taking those risks.
Of course.
Then other set were funds who only wanted operating assets in their portfolio, no development risk. That line has started to blur in the last 6 months. Everybody is talking about infrastructure. The government has been pushing on infrastructure sector. Public market funds want a share of the pie. They think there will be alpha in this sector. This sector is probably going to be a long-term winner and public market funds obviously want to have a share of that. So we expect the infra IPOs to come back the way it was probably. The IPOs really were between 2006 and 2010. We had a lot of IPOs.
I have personally covered so many thermal power IPOs and infra IPOs way back in the past. So that's a very important theme that you are mentioning and which could be really playing out very, very soon. Let me throw this question to Pratik. Pratik, what do you think? IPO versus InvIT. How will you look at it as a developer? And which route would you want to choose if both the markets are open?
A very good question. I personally, in my view, you're absolutely right about infrastructure and energy, including thermal energy being potentially available for IPO market. And I think the fundamental difference between the two is that one is a growth co and one is a yield co. Because the way SEBI structured InvITs, they can't fundamentally be growth cos. They can't have organic growth. Of course, they can have traffic growth, like how Sunil mentioned. So I personally believe that if interest rates begin to come back down, if US interest rates come back down in the next 4 to 8 quarters, then people will start to look for yield, more of growth orientation. Like India is always a growth market. Like people come to India to find growth because they get enough yield in their home countries. And therefore, if renewable IPOs or infra IPOs are back in the market and they make money, and this time around we don't have the coal risk or the PPA risk or those are kind of risks that we had 10 years ago. I personally do think that both renewable energy and infra IPOs should be very attractive. I think there is still, like Suraj said, there is still a role for InvITs. InvITs offer safe, distributable income, and there's a role for that, and there's a role for IPOs.
That's right. And the domestic market and the financial institutions, they have to really show the interest for the IPOs to make a comeback. Suresh, what are your thoughts on this debate? And also the participation of domestic investors in the asset class InvIT. How have you seen that particular traction? and the debate between IPO and InvIT?
With due credit to my esteemed co-panelists, being a student of infrastructure for the last 15 years or so, or infrastructure investing for the last 15 years or so, I still do think that what the country needs first is capital, right? The capital to build out infrastructure. Now, where that capital comes from is actually immaterial. The easiest tap to source for that capital to come is from long-term investors, which can handle the risk that India as a developing country can offer. Anecdotally, I can share with you that all large funds around the world have an allocation of about 10 to 15% towards infrastructure, and then in the range of 10 to 15 or 10 to 20% towards the emerging markets. Now, in the emerging markets, the only story that is playing out and will play out would be India, because where we stand. Now, in this regard, it's my firm belief, and markets are markets, and I've never played in public markets, so I can't comment on that. But it's my firm belief that for us to continue to deliver sustained growth for in the infrastructure space, for the new assets to get built, and for us to deliver and build confidence with international investors, and let's not forget domestic investors, right? We continue to have a track record, and InvITs or similar products would continue to have should continue to have a dominant role in that regard. Even today in India, the equity market allocation for domestic savings is only 8%. Right. I mean, we are feeling so happy about it. 22% plus 17% is between insurance and provident pension funds. And these two are yet not investing into InvITs and REITs. Certainly not InvITs. Now, and if our saving potential is growing and our country is growing and our saving rate is growing, right? So first we should be offering plain vanilla, boring, right? Tap into that, grow it, take that capital. Promoters like Pratik and other people who can take the risk, right, can build it. They can get alpha. They can make a 20%, 25% return, whatever. But the financial investors, I think, should still stick to boring infrastructure assets. Once, as a country, we fix our contractual framework, we're able to administer contracts, I think then the markets are open and we can change our position, or at least I'll change my position.
All right, but with the vision of interest rates going down, and of course, InvITs is a fixed plus equity kind of a combination. And on the other hand, the equity markets being so buoyant, I think the IPO is something that could be a preferred opportunity that a lot of infrastructure companies may want to really capture on. But both these points and factors are very fleeting in nature. So by the time you decide to, by the time you roll out, a lot of things can change also. So that's my final word on that. But Suraj, Suresh, as well as Pratik, thank you so much for this interesting discussion. Lots happening in infrastructure space, and capital requirement will be huge. A lot of action in this space, so watch out for more. With that, it's a wrap on this edition of Big Deal, but do stay tuned to CNBC-TV18.